freedom isn't the result of wealth. It's the foundation. Welcome to Wealth Independence, where freedom leads and real wealth follows through battle-tested strategies, hard-won lessons, and real-world experience. You'll discover how to accelerate your path to true financial independence. And now your hosts, Dustin Bailey and Adam Penn.
All right, welcome back to the Wealth Independence Podcast, where freedom leads and real wealth follows. I'm Dustin Bailey, here with Adam Penn. Adam, how you doing today?
Doing good, Dustin. Excited. We're going to be interviewing Saket Jain.
I'm excited about this interview. Saket's got a lot of experience in a lot of different areas. He's got a really cool story coming here from India. So he's got an MBA from Columbia. Guy worked for Airbnb in a fairly high level role at Airbnb corporate. So super excited to dive into the interview with him and hear his thoughts. He's got some unique perspectives on things. I think he's had a lot of life experiences that I think influence the way that he looks at the world, that he looks at wealth building, and really excited to bring his thoughts to you.
Yeah, I think one thing that I'm excited to hear from him is he's gone through a lot of changes recently, right? So I think this episode is going to play really well to anyone who's looking to make that transition, right? Either, he's moved from India with an engineering degree to here to work at a fortune, at a large company, to then be a kind of solopreneur out starting his own private equity firm. And recently he's kind of changed his life a little bit to be more focused on what it is he truly wants, right? So I think kind of tying back into our goals episode, he's gotten some clarity on that. So
that's exactly what I was going to say. I think this is a good timing for this too here, kind of in the early part of the year. This sort of stuff's on a lot of folks' minds as you sort of planning out the year and goals and everything ahead. So if there's a time for people like to make new starts at the start of the year. So this is, I think this would be a great episode to hopefully help everyone set their mindset for that. So we'll dive into it. Saket, how's it going today?
Hey, thank you guys. It's raining this morning. I don't know what's wrong with it, man. It's like 48 degrees, but it's raining. So I'm not sure I should be happy for the 48 degrees or should I be crying by the weather?
It's like right on that verge of like, it's the cold rain, but it's like not snowing. So you can't take advantage or you can't claim it like, oh, it's snow. It's just a cold, annoying rain.
At least it's snow. I think snow is better. I don't know, Adam, where you live. You would know what snow is. That's okay.
Yeah, we get it up in the mountains, but hey, at least you guys don't have like a massive hurricane ripping through there anymore. So
That's true. Hey, I heard California had a 7.8 Richter scale potential earthquake.
Yeah, my whole house shook. We had an earthquake
Wow, man.
About a few weeks ago, a week ago or so, and yeah, it was
time to move out, buddy.
Yeah, no, it was my doorbell started ringing. Anyway, I don't think.
There's something to be said with the fact that like that happened and this is the first I'm hearing about it. Like Adam, this was like apparently such a normal event that you didn't even feel compelled to say anything about it.
It was just an earthquake and it just shook the house a little bit.
If that happened here, I'd be running around telling everybody. There'd be like chaos in the streets.
No, it was just there was a tsunami warning for the whole Bay Area, but it was fine. Anyway, people didn't come to hear us talk about the weather. Saket, we wanted to talk. Me and you have been business partners on some deals, and we've known each other, same mastermind group that me and Dustin met in. What we wanted to talk a little bit kind of about your journey to becoming an investor. You've made quite a few changes from migrating over here to doing Airbnb executive to running funds to doing venture capitalists, selling insurance for a little bit. You've kind of been all over the board. You want to kind of walk us through some of your story and maybe some of the highlights?
So I think the key is I'm somebody who's always chasing freedom and I'm not afraid of change. Kind of, I say jokingly, I've lived in this country. If my accent and name didn't give away, I grew up in India, came here about 23 years ago, and I've changed 25 addresses, physical addresses, right? So I say jokingly that I'm chasing something, and until recently, I didn't figure out what it was. I think it's really the sense of freedom. And if I feel constrained in an environment, I'm going to make a move, right? And that's just how I'm built right now. So the changes that you mentioned, it's really, I think it's a path of in the chase of what freedom means for me. I think it's still an evolving goal, what it really means. Maybe I thought it was this, so let me try that. Well, it didn't work out. Didn't work out in the sense that it worked. Everything that I've done, luckily, have worked out in my favor, but it's not what I was intending to get out from there. Monetarily, it's been beneficial, which is great. I'm thankful for that. But it's not really the change, the freedom. The outcome of that change wasn't what I was looking for, right? Hence, a lot of changes. And 2017 is when I got first laid off, or the only time I've gotten laid off, I should say. Since then, it was really, I got shook to the core because, and I don't know if you have immigrants in your audience, but if you do, especially the Indians ones, we think we're super smart and we can never get laid off. And I'm no exception. So on paper, I've done everything right. But I went to one of the most prestigious institutions for engineering in India, IIT. And then over here, I went to Columbia for my MBA. So how can someone like me get laid off? But it did. And to no fault of mine, because there was a merger and the whole division was laid off, right? I say that as to make sure that I feel better about it, but it doesn't matter. I got laid off, right? And I think that was the first rude awakening I had. I had heard intellectually until that point where jobs not secure, jobs not safety, right? Intellectually, I'm rich dad, poor dad, all that stuff that I've read. But until that incident happened, I actually didn't internalize what it means that job is not secure. Job's a stable paycheck while it lasts. Until then, after that, it becomes super insecure and it can last at any moment, right? Just like anything else in life. So at that moment, I think that's really when I started my financial journey, understanding what freedom meant, freedom from the shackles of the corporate job. Now, that doesn't mean I was chasing $100,000 vacation or a private jet. It was never intended for. And if it came,
we all want a private jet. You don't have to hide that.
That's perfectly fine, man. I think I wanted like 2 of those. But it wasn't the chase of that. I think it was the chase of, if I get up in the morning, I want to make sure I'm doing what I love to do. And even if I'm making a little less, that was the start of the journey. And for that journey, I need to raise my floor, which essentially means that if at that point I stopped working, I would have drained my savings, right? So I need to raise my floor, which essentially happened in Robert Kiyosaki terms, that I need to increase my passive income, passive cash flow. So I went deep into the real estate world, where we bought over like 25, 30 homes, sold some. I never rehabbed anything. Adam, when the word rehab is so foreign to me.
You called me the other day when your AC went out and I had to walk you through trying to get it turned back on.
I didn't even know what you were talking about, man. They're like, there should be something there. I'm like, there's a lot of things there, but I don't know what you're talking about. So I never tried my hand in rehab, but I did buy a lot of the, what do they call, turnkey properties. Yeah, turnkey properties. That's where I made my entry into that. And really quickly, I realized that if I wanted to do this thing at scale, it's got to be in the multifamily area. So did that for a few years and realized that diversification is very, very important, even for myself and my investors. Then we launched, you and I, Adam, have launched an Airbnb fund a few years ago. Mm-hmm. That's been doing fairly good. I've started venture capital in medical devices sector, which is in its infancy to begin with. So now it's more of the floor has raised, which essentially means if I stop working today, I'm going to be in a better position than I was 7 years ago. That doesn't mean, again, no $100,000 vacations yet, but that's okay. No issues with that piece.
Something you said there that I think was pretty interesting, right? I mean, you've had all these changes throughout the years, and especially if we're like, so our audience is a lot of tech entrepreneurs or tech employees, I should say, who are working at tech companies, maybe high W-2, and they might be considering either passively investing to raise that passive cash flow like you were talking about, or to transition out of their W-2. We've talked a little bit about some of my story and how I've been able to increase my passive income above what my W-2 was. I want you to talk a little bit about how you said each one of these changes, you've had some desire, right? You either wanted more freedom, you wanted more income or something, and then you changed again later down the line. So what was that desire? What did the change process look like, and what was the actual outcome in maybe any one of those, right? Because some of these people maybe have just had a W-2 job since they got out of school. They always knew what the next thing was because they watched everyone else do it. So what did this kind of look like for you?
I'll tell you in 2017, and it's an evolving thing. I don't think it has, I've settled on this is the ultimate goal because it's going to change anyways. The goalpost keeps moving. So in 2017, the goal was I never want to be financially dependent on anybody else except myself, right? Not even my family. That was the entire goal, and that was a trajectory. Now, once I got into the world of real estate, I realized, hey, I'm at Airbnb, and at some point, this company is going to go public. My RSUs, I'm going to get tax phantom taxes, right? So then I went into the role, okay, can I use real estate to save those taxes? And happy to report, we basically minimized all of the RSU taxes, right? So it's possible. Now, 2017, did I know that? I did not know that as a going in, that it's possible. 2017 was, let me get $1,000 a month, $3,000 a month, right? The goalpost kept raising because you see what you're doing, giving a result financially. It was a purely financial objective at that point. Now, since then, it has evolved. Okay, you have figured out a recipe to get there financially. And if you keep doing it, you'll keep making progress. But what's the end goal? Right? Is the end goal $20,000, $100,000, $1 million? What is the end goal? And the more I started looking at it, the end goal is never a financial goal for me, at least. It's more about what kind of life I want to live, right? And I architected that life pretty carefully recently, where it essentially means is I know if I've changed 25 addresses in 23 years, there's no way I want to retail. Anything retail is not for me. Period. Right? Anything that I need to be operationally involved in, that's not for me. So I'm now making decisions based on what kind of life I want to live and what fits into that goal. Hence a lot of these things. And I'm also, I don't know if that's giving you the answer you're looking for, Adam, but that's really the change. The change is happening because the goalpost has evolved.
Yeah, I think that makes a lot of sense, right? I mean, a big part of, you don't really know what's going to happen when you make that change, right? You have this ideal and you have where you are, maybe where you want to be being that ideal, but the in-between is unknown. And if you keep having that, they talk about this a lot in the Benjamin Hardy book, The Gap and the Gain, right? If you keep aspiring for something more, you never feel like you hit it. And maybe what you're saying here is more like you know that your goal is to have a life, be able to live a life that you want, right? And have that freedom. But and so you're taking that and that freedom and making those decisions around it, right? So it's kind of a focusing question that you're using to make the decisions as you iterate through.
It's important, right? I think it's everyone needs to have a North Star. And if I maybe that's so bold, never have finances as your North Star. Money is a means to get there, right? Whatever that is. And if you need to get $1 million to get to your North Star, that's perfectly fine. If you can get there in $1, that's perfectly fine. No judgment on anyone's end. It's your goal, right? But to have a bigger North Star that keeps you motivating, because as we all know, it's a game of snake and ladder, right? I'm sure everyone has played it. Whereas you make 10 steps forward, sometimes you may get 2 steps back.
Yep.
Maybe 10 steps back. Who knows where you're going to be? But as long as you're making, I heard recently, a friend of mine is a day trader. He told me, you don't need to win every time. You just need to consistently win, which is exactly true in anyone's life as well. You don't need to always make forward moves. Sometimes you may have to take a back step to make 2 steps forward, as long as you're willing to make that.
What are some of the common mistakes you see professionals making when they're trying to take that shift to build passive income streams?
So I think a lot of that is depending, again, I'm an engineer by training and a consultant by profession. So I can think on both ends, right? As an engineer, the engineering side of me wants to have a 20,000 row spreadsheet with 50 worksheets in there and make sure that everything is mapped out. And I've done that before. Everything is mapped out. Everything is certain. I know exactly what I'm doing. That's the engineering side of me. The management side of me, I'm like, just tell me what the bottom line is. I want to jump into it. Now, again, both of them are not right? I think the part of that is, and both of them are not right in 2 different ways. One is the analysis paralysis, because I want to know everything about this deal. And by the time you're ready to jump into it, the opportunity goes away. That's one. The flip side of this other side is the management, the way the more executives think is, hey, just tell me the bottom line. I know I'll make an intuitive decision. That means you may not have, unless you have done thousands of deals, you may not have built that intuition underneath of you, right? So that is probably, I feel, the biggest mistake that everyone makes. And a lot of that is your training, right? It doesn't mean that you can't jump out of it. It's really your training. And the third thing that I would say is that it's really around not knowing why you're doing something, right? Like my friend who's a dater, the guy makes $5,000 a day consistently and has made that in the last 5 years. But is that path for me? I don't know. Now, I'm not saying it's good or bad. I have to also know, just because it's somebody else's path, does it really align with my path?
And I think some of what you brought up there, especially around like, hey, you have the engineering background, you want to go build a 20,000 line spreadsheet, right? And we can all do some crazy spreadsheet math to try to figure it out. But at the end of the day, the real world hits. How do you balance that kind of engineering mindset, or what principles from your tech background have you successfully applied to your real estate investing career?
So I think anyone who's in tech sector already, they already have, their risk appetite is more than somebody who's employed at a blue chip, right? Because like when I joined Airbnb, I knew the company was good, but there was no guarantee the company was going to go public, right? Or it goes public the way I expected it to go. There's no guarantee. So I think anyone in that sector has already taken that jump of leap of faith. So I think that's going to work in their favor. That's one thing. Because at some point, there is a faith element into this, that you believe it's going to work. So I think for me, it's really more around, I've been very fortunate that as a management consultant, we were buying businesses from my clients, right? So I've learned it on somebody else's dime. So it may be a little bit biased answer, but in my favor, that I've already gone through that analysis of, hey, I need a 20,000 row spreadsheet versus I need to get comfortable enough to make a decision, right? And then there's going to be, and I learned under tutelage of some very successful merger acquisition professionals. So they have taught me how to think differently. But if somebody were to start it today, I think the best way to do is to partner with somebody who actually knows what they're doing. Like someone like our funds that we've started. Now, we're not saying every opportunity is going to work. That's the second thing. Putting your last $50,000 in opportunity is not a prudent thing to do, right? Like there's a friend of mine who put about $50,000 in a deal. The probability of winning that deal was pretty high. And Adam and Dustin, I won't say the name of the deal, but the fund has always paid for the last 12 years. You probably know already which fund I'm talking about. He put his daughter's college education fund in there, and the deal didn't work out the way it was intended to do, right? And he was calling me the other day. He's like, dude, I don't have the funds anymore. I'm like, look, we can figure it out. But had you told me this is the only money you have for the college fund, I would have never taken your money, right? But on the flip side, those were the things that you have to understand what your risk appetite is. The story that any sponsor will tell you about the opportunity they're presenting in front of you is going to be beautiful, not because they're trying to lie to you, it's because they really believe in the deal. Otherwise, they won't be coming to you. Right? They're risking their reputation, they're risking their own money, they're risking the time, they're putting a lot into the deal. So it's not that they are lying to you, it's just that they know what they know, and there's a lot of unknowns in the deal, right? So best way to learn is not to buy yourself. Don't buy, I've done that, I've lost a lot of money. My first apartment was a portfolio deal of 3 apartments, 100 unit each. And I got all of my Excel geeks out there, combining multiple different sheets. I loved it, but it didn't work out. It's because there was a slight nuance that I didn't pay attention to, and we lost close to $175,000 into that deal. Right? So you can lose it if you're doing yourself, because these are complicated assets. These are complicated deals, right? These are operationally challenging aspects of the deals that you have to be really, really careful about. So, Adam, there's no real one thing that I can point in my career saying this one thing helped me. I think it's more understanding that there's a time to learn and time to earn.
And it seems like a lot of it is about finding the right partner, right? And finding the right people to work with, right? It's a team sport. And so maybe talk a little bit about what you look for when you start working with someone new or invest with someone new.
The biggest thing is this. We used to always, when I used to hire from a management consulting company, I always say, can I sit with that person for 10 hours at the airport and still like it, right? And not kill myself. That's the first test. And that, can I actually deal with that person?
Someone the other day, they said it's the beer chugging test. Would you chug a beer with this person?
Would you? Yeah, completely, right? Would you be willing to spend time with that person outside of a deal? That's the first test that I have. Then the second thing is really around what's their experiences. The third thing, which may surprise, it's more about their own resiliency, right? Because not every day, not in an operationally challenging deal, not every day is going to be a happy day. There's going to be challenges. There's going to be, again, a game of snake and ladder. You're going to take a forward strand, they're going to make a backward strand. So how do you deal with something when there's a setback? Like there was one person in one of my early deals, that person, I had to babysit that person, man. I love that person to death, but I'm like, next partner, I want to make sure that if something happens, we're trying to solve it together rather than me every day consoling them. That's going to work itself out every day, right? So I think those are a few things. The third thing is really around, are they putting their money where their mouth is, right? How much are they going to become a dead weight?
Yeah. So really making sure that they're actively involved. Well, I've got one more question for you, and it's really you've been part of some Bidwell Capital deals, and our tagline is building generational wealth. So what does that bring to mind, or what thoughts do you have or strategies do you recommend for building generational wealth, right? Not just $100,000 tomorrow, but maybe 100 million over the next 200 years.
Yeah, so I think patience is one big virtue, right? Kind of like making sure that there's no get rich quick scheme. There are many, but most of them are Ponzi. So you have to be very, very careful to make sure. And I've been part of a few, so I know exactly what I'm talking about when I say that. It's not a book that I read and I'm saying it. There's no if it looks too good to be true, don't get into it. There's always another opportunity that you can invest your money in, right? That's one thing I would say. But now, to directly answer your question, Adam, what does generational wealth mean? I think it means a lot of different things. It's not just about money. For me, it's really, when I think about the legacy, is what values am I imparting to my kids? If I have $100 million and I leave it to my two daughters, me and my wife, what exactly are we? Are we just giving them money, or are we actually giving them values, right? So it's a fine balance between the two. So what I would say is that compounding, one answer to your question is really around, if just purely from the financial perspective, the sooner you get in, the time in the market is very important than timing the market, which is, I'm borrowing this from, I think it's Warren Buffett said it. Somebody said that, somebody much smarter than me said it. I'm just borrowing it. So I think it's going to be more, how actively are you invested in investments, right? Which essentially also means, if you want to take if there's a decision between, I want to buy I'm making up a number, $2 million house versus $1 million house, but taking the drop in that value of the house will allow me to invest some money for the future. You have to really analyze that, right? Because buying a house, it's a very emotional decision. So I'm not going to say it's good or bad. I've fought that battle at home several times and I never win it. So you guys have to figure it out yourself. But I think more important is that when you're making these decisions on I'm not talking about a cup of coffee. The latte factor is not the right mindset that I adhere to. But it's more important is when you're taking like bigger purchases.
Yeah. Warren Buffett said something along the lines of, he didn't buy a couch one time when he was with his wife because he compounded the $1,000 couch over the next 30 years. He's like, this couch is going to cost us $1 million.
Yeah, completely, right? Now, also, when I say that, don't live your life like that for every single decision you have to make, right? So I think there's a fine balance, at least when you're asking me that question, my perspective, because then you don't enjoy the life, right? Yep. So figure out, I think Ramit Shetty talk about dials in life. You have to figure your dials. Like someone's going to be low dial, someone's going to be high dial. I'm butchering it. But if you want to say, I think the guy wrote a book, I Can Teach You to Be Rich, or something like that, Ramit Shetty. I like his concept of dials, where if coffee gives you happiness, don't lower the dial, keep the dial, but lower something else. You're a decision maker of your own life. If you want to buy a couch, don't buy a couch.
And Kiyosaki and Rich Dad Poor Dad had a good story of Kim when she wanted to buy a car, but instead of buying the car, she bought a house that cash flowed and then paid the car payment. So,
Correct.
Sometimes
Correct.
you can find ways to buy into income streams that then can go buy you the other things you want.
Yeah, I think, Adam, another thing that you just made me realize something that I should have said is more about it is that when it comes to wealth, and it's borrowed from Kiyosaki, so it'll resonate with your audience as well. There's a difference between net worth and cash flow, right? Make sure you understand that difference, because a lot of folks, and I am on all the ends of the spectrum, because venture capital is all about net worth, there's no cash flow. Real estate is all about cash flow and then appreciation. At least that way I look at it. I'm not chasing the appreciation, but in venture capital, I am chasing appreciation, right? So you have to understand where on the spectrum are you today and where you want to be. And I think Kiyosaki also talks about, I don't know if it's explicit or I may be now combining a lot of different things here. In terms of your net worth is the number of days you can live without working. Right? Now, you may have $100 million and you may survive for the next 100 years. That's perfectly fine. Most of us don't.
But even then, it's only the next 100 years, right?
Next 100 years. So then we're not talking about generational wealth. But if you have a cash flowing asset, like our Airbnb fund is a great fund for that. When we have a cash flowing asset, you can live on that cash. Yeah. You may not be able to claim at a party have a $50 million net worth, but you can claim at a party that you'll never have to work again. Right? It's just a different way of looking at it. It's very important. It was my mind was blown away when I heard this concept first. I'm like, freedom is not that hard. Financial freedom is not that hard. It's just that everyone's talking about you need to get to $5 million before you can retire. Well, that number is an arbitrary number that somebody on the Wall Street made up.
Mm-hmm. Yeah, you need to get cash flow. I think for listeners that haven't listened to it, going back to V0.3 episode is we talk about equity versus cash flow. And it's an interesting topic to dive into. Well, Saket, is there anything else that you want to add before we wrap this up?
I think it's really be clear on what you want, right? And be very intentional about it. And I mean, for those of you who know my journey, I think actually your audience may not know my journey, so it may help them. Along with all the changes I've made, I've spent about 2 years in a monastery back home in India, right? So this is after I came to the US. I figured out the recipe to make money. Now, will I ever be a billionaire? Who knew? But I'm like, yeah, there's no challenge left. So there's something more to life. So I actually went back to my roots, kind of figuring it out who I want to be. I'm still chasing that and what I want to be when I grow up. Again, I don't think I'll ever grow up. But those 2 years in the monastery really taught me a lot about myself, right? So a lot of that thing is I take some time away from all of this noise. Even this podcast or 1,000 podcasts, a lot of that is creating a lot of thoughts in your head, right? It's all good thoughts, but ultimately it's a lot of noise. So what you have to do is you have to listen to these things so that you can get inspired and then turn off the noise, all of the noise. And then let the universe speak to you, which is going to be, you're going to get your answer. You're going to get your answer. I took a 30-day sabbatical recently. I'm a sabbatical. I work for myself, so there's no sabbatical. Every day is a sabbatical. But I completely shut off everything. No internet, no phone, no computer, nothing. And I went back to India just to focus on myself for about 30 days. And the person who was guiding me through this, the person said that, I'm like, I can't read a book. I can't do anything. What do I do? The day feels less productive. I'll never forget what he said. He said, just look at the tree. I'm like, what do you mean just look at the tree? He's like, yeah, just look at the tree. You don't have to do anything. Dude, for the first week, my mind was going crazy. I'm like, there's more to life than just looking at the tree. And kid you not, 3 weeks into it, It may come as a very mushy person, but I looked at a spider web and I cried for 30 minutes. It's just changed, like completely changed, because there were a lot of the life lessons were reflecting like the spider web. How the hell did the spider know where the two ends of the spider web needs to be? How the hell did he figure it out, right? How the hell did he figure out that there's going to be wind, so I need to build this? It's so beautiful, man. When you think about it, I'm like, oh, this is what life is, that you figure it out, right? You don't have all the answers. The spider didn't know it had to make a beautiful web, or a web that he was just trying to survive. He was doing one step after the next step, after the next step, after the next step. I added the attribute, it's a beautiful thing. And the reason I'm sharing with your listeners this thing before leaving is when you look at your life, just look at a spider web, right? You have to figure out what the web will do for you, what the life will do for you. If you're listening to your parents' noise, if you're listening to this podcast, my voice, it's all our own perspectives that we're sharing with you. I'm not saying we're lying, and these have been life-changing for us. But ultimately, you have to figure out what that spider web looks for you, right? And only you. If somebody else calls it ugly, it doesn't matter, because this is your web and it's going to work for you. So I'll leave your listeners with that mushy note, man.
Thanks, Saket. Do you mind telling our listeners where they can connect with you?
Of course. So first of all, I have an offer where for whoever on your listener base gives you guys a rating and a 5-star rating. Now, you don't have to give 5-star rating. Any rating, it should work. To this podcast, to both my man Adam and Dustin here, and send me a recording of that, screenshot of that review. I will personally give you a 20-minute free strategy session with me. I've stopped doing that anymore because I'm in a transition path. I'm looking for another change. So another change is coming, which is going to be very different from what I've done so far. We're looking into both me and my wife are probably going to be partnering that piece. So it's going to be very different. But if you're in that path of looking to figuring out what the financial wealth means to you, generational wealth means to you, and my story resonated with you, all I need is a 5-star, or I should keep saying 5-star because I want to give you 5-star rating, screenshot on whichever platform these guys prefer, and send it to me. I'll give you my calendar link for that. My cell phone number, this is my personal cell phone number. I'm giving it to you, 703-380-2020. I have no problem. And I don't have a VA who checks my phone. I check my phone. So if you send a screenshot on that number, expect a 20 to 30-minute strategy session with me, and you don't have to pay for it, right? So that's one
awesome.
thing. And where you can find me is really on all the social. I'm not that active on social, given the few things that I've done recently, the 30-day sabbatical that we were talking about. I'm changing the direction of my life, right? Mm-hmm. But I have my previous podcast online already. I have a lot of other nuggets that I've shared. But so if you want to reach out to me on any social media platform, LinkedIn is probably the best one. It's going to be the Saket Jain, the letter THE, the Saket Jain. You can find that. I hate the word "the" before my name, but I couldn't find anything else. That's a lack of creativity. But that's where you can find me. And if you ping me and tell me where you found me, I'll make sure that if you guys are coming from this podcast, I will respond.
That's awesome. And we will make sure to have that information, and we appreciate the offer. That's a very, very generous offer for everyone. I certainly hope someone takes you up on that. But we'll make sure to get all of that and all of your information down in the release notes. But yeah, this has been great, Saket. Honestly, like this is fantastic. We could dive into like so many of these topics for hours. We could just go down different rabbit holes. But this was fantastic. We really appreciate your time today.
Thank you for having me here, guys. And anytime. These guys are real deal, guys, Adam and Dustin. And I'm not saying it because Adam is my business partner and I love Dustin. I'm saying it's because they're real deal, right? So subscribe to the podcast, listen to the podcast. I know I will, and I know I have. And these guys are great strategists themselves, right? And unlike me, they're on the younger end of the spectrum. So they'll give you insights that I probably don't and I can't. But so take them for what they are offering and at least look into it.
Awesome.
Well, thank you.
Thank you, Saket.
We
Awesome.
appreciate it. We'll make sure to Venmo you the money for that plug later. So
Yeah,
thank you.
let's keep collecting them. Thank you, guys.
Thanks so much, Saket.
Well, everyone, thanks for listening to our interview with Saket. Hopefully you found that as wonderful as we did, and hopefully you take him up on his offer for that consultation. Man, the guy's just a wealth of knowledge. We're definitely looking forward to probably talking to him again shortly in the future.
No, for sure. He had, there were so many things in that, so many nuggets. I honestly, we could have spent hours on any one of the things he said. There was so much. He kept like dropping bombs that I wanted to interrupt and like go into detail on those things, but there was just so much. And he's got such a unique perspective on things in life, and his story of that's now a phrase of like, look at the tree. Like that's
yeah.
Try to like
just go stare at a tree.
Yeah, I'm going to implement that in my own life. I mean, there's a very deep lesson in that, and I think that's especially as we live in a world that prizes moving very, very fast and can kind of get lost in things sometimes. I think that's
just think of that when I tell you to go take a hike. That's really what I mean. Obviously mean take.
Yeah, I'm just going to go into my backyard and just stare at a tree for a few minutes.
Yeah. I'll take a hike. Okay. Well, appreciate everyone for being here. Remember, where freedom leads, real wealth follows. Join us next week.
Thanks, everyone.
Thanks for joining us on Wealth Independence. This show is for informational purposes only and is not financial, investment, legal, or tax advice, and does not constitute an offer to buy or sell securities. All investments carry risk, and investors should always conduct thorough due diligence and consult with qualified professionals before investing. Until next time, remember, freedom leads and real wealth follows.